Welcome to Business Exit Success, the podcast dedicated to helping small business owners on how they can successfully transition out of their business on their terms while also living a life of purpose and fulfillment after the sale. I am your host, certified financial planner and certified exit planning advisor, Tom Poltersdorf. So you're thinking about exiting your business. Maybe you're thinking about retirement or transitioning out of your business to spend more time with your family or travel. Two crucial questions have probably crossed your mind. How much do I need to save and where do I need to put it? Because hopefully we're not working for the rest of our lives, right? Even if you enjoy working or don't consider what you do to be work, many of us hope to one day reach financial freedom, reach financial independence, which in my opinion simply means not having to worry about money anymore. You have enough money to do what you want, cover your living expenses, and take care of the people you care about. In order to reach financial independence, we need to think long term and understand that once we stop working, once we transition out of our business, we'll need to have an income stream. Think of this like climbing a mountain. We think the objective is to just get to the top of the mountain, right? Well, that's really not the case. Our ultimate goal is to get to the top, but then safely make it back down. When we think about this in terms of our financial lives, the journey of going up the mountain is the accumulation phase, and getting back down the mountain is the distribution phase. Now, I'm obviously not a mountain climber, but one of the most important things is making sure you've brought enough supplies to get you back down the mountain safely. In order to do this, we need to understand how the retirement distribution phase works so you know where to put your savings in the accumulation phase. The problem is many don't get the chance to look at their financial situation from the perspective of the distribution phase. Many are generally aware of what they should be doing in the accumulation phase, like we should save more, spend less than we make, pay off debt, etc. Not being able to look at your financial situation from a distribution perspective can be very costly in the long run because you may discover you're not saving enough to support yourself and your family in retirement or understand how inflation affects your potential retirement income. Or you never had the opportunity to project out and look at your future tax situation. Depending on the type of an account you can take distributions from, some folks can end up paying more in taxes in retirement than they were in their working years. Pension plans used to take on the responsibility of providing a retirement for people, but today, pensions are nearly non-existent and it's left to the individual to figure out how to participate in a 401k plan. For business owners and entrepreneurs, it's even more difficult, especially if you're a new business and just trying to survive in the first 5+ years. You're not saving for retirement. That's the last thing on your mind. You're initially pouring all your profit back into the business, trying to put food on the table. If you're lucky enough to become profitable, you then need to figure out how to set up a 401k plan or how to set up a SEP IRA for your business so you can start saving. There's no employer for the business owner that figured all that out already for you, right? It's up to you to do the research, figure it out, and put things in place for yourself. Then once you are contributing to a retirement plan, there's no information on how putting money into a 401k turns into an income stream for you later down the road. Financial research suggests withdrawing only 4% from your retirement accounts, which if you think about it, you'll need to save $1 million to live on $40,000 per year in income with that math. Also, when you factor in inflation, $100,000 in today's dollars would be worth $180,000 in 20 years with only 3% inflation. And we all know inflation right now in mid-2023 is way higher than 3%. But that means in 20 years with 3% inflation, if you wanted to live off an income of $180,000, you'd need $5 million saved up for retirement. And how likely is that to happen? If you've been making a high income for a long time and have been saving for a long time, you can get there. Or if you're a business owner, you can build an attractive business and sell it. Or if you don't want to sell your business, if you have a lot of profit, there are strategies where you can save hundreds of thousands of dollars a year into a retirement plan. So there are ways to get there. But back to my original point. Understanding the hurdles of the distribution phase will help ensure you are equipping yourself to making the right financial decisions with your money and your business in the accumulation phase. So here are some of the hurdles that you can encounter in the distribution phase and what to look out for. The first is taxes. Depending on where you put your money in the accumulation phase determines how it will be taxed on the back end when you take it as income in the distribution phase. And here's an example of where to be careful here. If you have $1 million in a 401k or SEP IRA, that's really not worth $1 million. It's $760,000. Now, why would I say this? Because that money will be taxed at your federal income tax rate. And in this example, I'm assuming a federal tax rate of 24%. Unless you qualify for an exception, when you take that money out as income, all this money will eventually be taxed in the distribution phase. And that's not including state taxes, unless you live in one of the 9 states where there is no state income tax. On top of that, in many of the tax-deferred accounts, if you take a distribution before the age of 59 and a half, the IRS slaps an additional 10% penalty on top of the federal income tax. So understand the types of accounts you are saving into: a 401k, a SEP IRA, tax-deferred accounts. You put money in today, don't pay any taxes, but down the road when you take it out, the IRS wants to get paid and you pay the taxes upon distribution. Number 2, continuing with taxes, but from a business owner's perspective, if you are depending on selling your business to fund your retirement or a portion of your retirement, in most cases, your business will be taxed at long-term capital gains rates if you've had the business for longer than 1 year. Long-term capital gains rates range from 0, 15 to 20%, depending on your taxable income. For some context, if you've married and you end up having a taxable income for the year, let's say greater than $554,000 in 2023, you pay 20%. Generally, if you sell a business, the vast majority will be paying the top long-term capital gains rate of 20%. So if you sell a business for $2 million, you'll net $1.6 million in sales proceeds, paying $400,000 in long-term capital gains taxes. And again, this isn't including additional taxes. It's not including transaction costs of the sale or paying your employees. So your net proceeds would most likely be lower than that. In my experience, seeing how the sale of your business will play out for your distribution phase will be vital, because for many owners, the business will make up the most of your net worth, and you want to make sure you'll have enough money from the proceeds to fund your desired lifestyle. Number 3, there's many other potential hurdles in the distribution phase to look out for, and these can include unexpected health expenses, paying for the care of a loved one, someone passes away, becomes disabled, you get sued. All of these can really derail you in the distribution phase if planning wasn't done in the accumulation phase and upfront. So what I'd suggest you do, and what has worked for me when helping business owners with this, is make a list of all your assets with the value of each next to it. Where is the bulk of your net worth? Is it in investment accounts, in real estate, in your business? Consider how accessible each asset is, meaning how fast can you turn that asset into an income stream or be able to access it without penalties and fees? Can that asset eventually be an income stream for you in the future? What protection is in place for yourself and your business? Do you have appropriate insurance? Do you have an asset protection plan, a will, a power of attorney, debt repayment plan, saving strategy? All of these are tools that if you have in place can help you get down the mountain, be protected, and provide a sustainable income stream. Hey everybody, real quick before you take off, if you found this episode helpful in any way, please rate the podcast and leave a review. I would love to get your feedback and see if there are any topics you'd like to hear more about going forward. Thank you, and I appreciate you all very much.